Hey guys, welcome back to the channel. In this video, I'm going to go over all three Silver Bullet sessions for June 6th, starting with the London session from 3 a.m. to 4 a.m. Okay, so the first thing that we come to our charts here, the dark gray areas is the Silver Bullet hour, respectively. This is the 3 a.m. to 4 a.m. Eastern Time. So that when you see this on the next one, it'll be the next Silver Bullet hour, the AM session. So this one is the London session. Here's 3 a.m. When we come to our charts, what do we see? We see that we just took out a short-term low here. We also took out a short-term low here. So price comes up. It takes out this market structure shift right here. This is the swing high that took out this low. And then you have a little pullback, takes it out here. That's fine. But I'd consider, this could be a market structure shift. This could be a market structure shift. Either way, it's still 2 bars up here. You don't have any pullback, so you can I just take the highest one, okay? Then looking back, when we clear this is the 2022 model forming here. We see that we have a fair value gap right here, and we have a fair value gap right here, okay? When there's two, I'm looking to trade into the second one, okay? I try and go back to the deeper pullback. If you pulled a fib from this right now and from here to here, this is optimal trade entry zone area right here. This is above equilibrium from here to here. I want to have be down here. Now, yes, you can pull it from here and be back here, and this would be in equilibrium. That's fine. However you want to pull it. But right now, in this leg, in the pullback, this is optimal trade entry zone. So I'm going to go back in through this fair value gap. When it traded back in there, I'm taking my trade. Now my stop loss is below the third candle, which is the first candle of the 3 candle pattern. I go right here, 1 tick below that. So I do get some drawdown here, some heat. And if you're right here and you're in this trade right here, you're getting worried. Then it comes back up, stops here, you're fine. Come back down, up and down, you're fine, right? So you'd be getting in right there. Now, where's your drawn liquidity? Well, this is your drawn liquidity, and what that is the high point from earlier today, about 12:30. There's your high, so you're targeting the high of the day, the current high of the day. That's where your drawn liquidity is. So as price comes up, what do you see? You have a volume imbalance right here. So you could take your trade on I would take it on the volume imbalance, but you could also take the same one on the fair value gap. And as price came up, there's your 5 handles, and you've got out right there. Okay, just to show you what it looks like without the markings on there. That is the London session, the 2 Silver Bullet trades on June 6th. Now I'm going to go over the AM session Silver Bullet trade setups. Okay, this is your AM Silver Bullet from 10 a.m. right here to 11 a.m. Eastern Time. What do you see first? You have a short-term low being taken out. Where does this low come from? It comes from the low of after the London session. That's the low right there. It's not is it the low of the day? It is the low of the day as well. So that's where that took out. So you took out liquidity right there. Price comes up. It's working its way up. That's where we start the 10 a.m. Silver Bullet hour. Let me just move this over like this. So price comes up. It's market structure shift right here. This is the swing high that was the catalyst to take out the swing low, or to make the new swing low. So took out liquidity. So that's your swing high. Yes, you have a short-term high here being taken out, a short-term high here being taken out, and yes, you have some fair value gaps, which I show you right here. There's a fair value gap right here. There's also a volume imbalance right here. There's also a fair value gap here. Like I just said in the London session, if it's there's 2 fair value gaps, I'm taking the second one, the deeper retracement. Okay, this one happens to be a volume imbalance too, so I'm looking for an entry right there. So when that happens, I'm taking my trade right there. That's where you get it in at. And then your drawn liquidity is right there. Let's see where that is. That is yesterday's PM session, one of the highs right there. That's your draw. That's 14 handles, a 14 handle move. So that's your draw. You would have, you're only needing 10, which is right here, which is in between the new week opening gaps. But you could go for 14 right there. That's where it ended. That's, a 4.31R trade. Okay, it's a great trade. To get 5 handles, aiming for this swing high, and you got 6.5 handles right there. So this is a good trade right here. And let me show you what it looks like without this on there. There's your entry, your exit. 2022 model. Liquidity taken here. Market structure shift. Pull back, fair value gaps. Go into the deeper retracement. Take the trade. When it comes over to the volume imbalance or into this fair value gap, place your trade. Go to 1 to 2, risk 1 for 2, so that you get it here. And if you trailed your stop loss, you could have got 14. That is your AM Silver Bullet session trade setup. Now let's look at the PM session Silver Bullet trade setup. Okay, here we are at the 2 p.m. right here, 2 p.m. to 3 p.m. Silver Bullet hour on June 6th. So when we come to our charts, what do you see? Short-term lows being cleared. So liquidity being taken. That is the low from the lunch hour, lunchtime lows. Then we have short-term high being taken. So I wanted to mark that out so you see that that's a short-term high. I would consider this the market structure shift. This is the low one that took out liquidity. Yeah, this comes back down, so this could technically be a market structure shift as well. But you don't have any pullback into this fair value gap yet, so it doesn't really matter. You can use this one or this one. Just showing you it's semantics. You can use this one or this one as your market structure shift. Either way, there is no pullback until you get to this point. So this doesn't really matter which one you call what. Then you have a fair value gap right here when you look left. When you get to this point, you look left. You find one there. You mark out this fair value gap. Now, you didn't get to this bottom one, so you didn't get down to the bottom one. Like I just said, you come down to the bottom, the deeper fair value gap. Okay, you don't get it. So you could take this trade. If it doesn't come up to it, you could take the trade. You could take your trade right here even at the top of this, because you see it's leaving it. So my stop here would definitely be below, one tick below this second fair value gap for sure. Ideally, you want this to come down into here, but it doesn't give it to you that way. So when this candle starts this candle right here, as leaving the fair value gap, I'm entering this trade because it's not going to come back down. It doesn't want to come back down into this fair value gap. That's clear. So I'm taking this trade because I know that I'm targeting this and this new week opening gap. Okay, so 2 to 1 would be right here. And I'm still aiming for this right here. Your draw is this right here. So you can go 2 to 1. 2.5 is right in the middle of the new week opening gap. Wherever you want to go there. 2 to 1 right there. So that is your PM session Silver Bullet on May 6th. Well, let me show you what it looks like without it. So you see it's right there and there. As you can tell, the arrows are not executions. They're just for visual aid.